Valuation, why it actually makes sense. This is StockerFinance. I am your host, David Shore, twitter.com/StockerFinance. Robinhood and Patreon links are below if you'd like to support the channel. So currently, this is probably how many of you feel about Tesla stock. It is going wild the past few days, approaching that $1 trillion market cap, and many people are just confused about the valuation, saying it doesn't match the fundamentals, there's lots of critics, etc. But I'm here to argue slightly against their argument and perhaps provide some reasoning to why this valuation is actually justified. Now, in the past year, Tesla stock has increased over 670% in the past year since the, I guess you could say, the coronavirus low during March there. It's up 1,100% since then. So that was the 52-week low of $70.10. It's now a 52-week high of $884.49. With a PE ratio of 1,600, price to sales ratio that was significantly lower than that. A market cap $768.93 billion. Pretty incredible growth here, to say the least. Over the past 5 years, it's up over 1,800%. Just incredible. However, today it actually decreased about 8%. A little correction here. Nothing too alarming. People are profit taking, etc., etc. But is Tesla's valuation justified? That's the question we're going to answer in this video. So here are the reasons that I primarily hear against Tesla's current valuation. Number one, we see demand is overstated, such as not enough demand, battery cell production difficulties, too much competition, they're not actually profitable without the government incentives, Tesla's debt problem, short interest increasing or decreasing, whatever it might be, just short interest in general. Then the valuation just simply doesn't make any fundamental sense. Like when you look at their balance sheet, when you look at how much profit they're actually making every quarter in their revenue, their margins, it just really does not add up to this valuation for Tesla. However, here are some responses to each of these. Number one, demand is overstated such there isn't enough demand. Well, in Q1, they had 2020 hit a record-breaking backlog of orders, and to be honest, Tesla throughout its history has simply had too much demand, especially in recent years, with the Model Y just thriving in China and the US as well. Model 3 just completely... the sales and deliveries of the Model 3 have been incredibly impressive. Model S and X, although those sales have slowed down a little bit here as they've been cannibalized slightly by the Model 3 and Model Y, they still have incredible sales throughout Tesla's history here. Battery cell production, small issue, but I think they do have a bit of a battery cell production problem, and we can talk about that more in a different video, but cell production will need to meet demand. However, that's not a crushing problem right now that has to do too much with the current valuation, but that could be a problem running into the future. But we'll talk about, again, that video could be an hour-long video just on battery cell production and technology. Too much competition. We all know that's not true at all. Tesla dominates the EV market. Legacy auto and new competition have proven to be very little threats. General Motors did okay with their Bolt or Volt, whatever it's called. I think it's Bolt. Their Bolt vehicle sold pretty well. However, they haven't seen... when you just look at the charts, when you look at the market share owned, Tesla owns significantly more market share than any U.S. auto company and pretty much any company in the world right now, which is pretty incredible. And not just in not just in the EV market, which they dominate, but also in the world auto market as a whole. They're continuing to take more and more market share. They're not actually profitable without government incentives. This has been a controversial thing, and actually for me as well, looked at this and said, this is kind of an interesting point of view to take on Tesla, that they, without a lot of these kind of government incentives, they really struggle a lot more, to say the least. But again, one issue, and I really agree with what Elon Musk stated, and I'm paraphrasing him here, by the way, in this quote. He basically said, why are people targeting us for incentives when all the other competition has incentives as well? If you're going to take away all their incentives, then you can take away ours as well. But to criticize Tesla for having these government incentives and being profitable because of that, well, it's not really fair to criticize them when all these other auto manufacturers, all these other U.S. businesses are getting huge government incentives as well. Tesla's debt problem. Well, Tesla actually has the least amount of debt out of any U.S. automaker. In fact, it's not even close, and we'll talk about debt a little more later. Short interest. Shorts have been squeezed, and short interest has been decreasing significantly throughout Tesla's history. Might be slightly higher right now, but Tesla's short interest has been decreasing for a while. Now, Tesla stock reflects the intrinsic value of the underlying company. That is the statement that I'm making for why the valuation is at where it's at. I'm saying Tesla stock reflects the intrinsic value, and that's the key word here, of the underlying company. Now, what do I mean by this? Well, Tesla stock is simply pricing in future accomplishments. And also prices in future market sizes. To just run a list here of what I believe this stock and investors are pricing in for the future of Tesla is the EV market is expanding rapidly and Tesla's leading the charge they touched on. Full self-driving, robo-taxis, and that, the potential for that is huge. Tesla Semi orders and market size, Cybertruck orders and market size, Tesla Roadster, the new one at least, orders and market size. The Tesla quad bike orders, obviously you can't buy that individually, you have to buy that with the Cybertruck, but the market size of that is actually really big as well. Advertising sales, which I'll touch on a little bit, data sales, Tesla Energy, that whole segment to Tesla, Solar City, et cetera, the list goes on. So they're pricing in all of these different features that are coming out, or all these different market sizes that Tesla is competing in, that Tesla's innovating in, and then they're taking the intrinsic value of all these increasing market sizes, Tesla taking market share, etc., and that's where this valuation is really coming from. And so that's why as a fundamental investor or a value investor, Tesla's valuation may make no sense. But if you're looking at the intrinsic long-term value of Tesla, I think eventually the company will actually be making enough profit and actually be worth and justify its valuation. It'll always trade for more than its earnings, of course, but I think that PE ratio will come down over time as Tesla makes more and more money, and as its share price, in terms of it increasing in price, will start to slow down slightly as well. Now, electric vehicle sales, which is not a bad thing, by the way. Electric vehicle sales, it's expected to grow 50% in 2021. I mean, the market here is huge for Tesla. Global electric vehicle sales are expected to grow 50% or more just this next year, while sales of internal combustion engine vehicles are expected to grow only 2 to 5%. That's the view of analyst Morgan Stanley, or someone at Morgan Stanley, who, in a note to clients on Friday, also predicted that global EV penetration would top 4%, rising to nearly 31% by 2030. The year 2021 is shaping up to be a critical year for EV adoption and internal combustion engine de-adoption that will dictate the pace of multiple expansion, contraction, consolidation, and proliferation among the stocks. I completely agree with this analyst. I think that Adam Jonas is who said that in that note. And yeah, there's a lot of potential for the EV market here. If we look at the auto market history here, in 1976, there's 342 million vehicles. 1996, 670, 1.34 billion global vehicles in 2016, and 2.68 billion are projected to have that many vehicles around the world by 2036. So EVs are growing. Penetration is continuing to grow as well with EVs in the auto market. On top of that, we're seeing I guess you could say depenetration or slowed growth of the global combustion engine market and the global auto market as a whole as the population continues to grow, especially in India and especially in China as well. Those populations are huge and growing pretty rapidly. We're going to see them, and as their economies grow as well, they're going to need vehicles, they're going to need cars as their infrastructure continues to build out. Same with places in South America, Central America, some places throughout Eastern Europe as well. Tesla's also ramping up in China, which we're not seeing any other automaker do, especially no U.S. automaker. The fact that they have that deal going on in China is huge for them. There's a Europe ramp up with the Berlin Gigafactory. North America is going strong as well, especially with the Cybertruck Gigafactory. So yes, this valuation might seem a little crazy, but imagine when all these factories are done, imagine 2036 essentially. That's what investors are pricing in. They're looking at this and saying, okay, what is the long-term value or long-term intrinsic value of Tesla? And that's what they're pricing in today. And that's why the valuation is so large compared to Tesla's balance sheet. The Tesla Semi also has 512 confirmed orders. Elon claims there's about 2,000 plus, which would equal $400 million in sales. So just that alone, they're pricing in. We also see the Cybertruck orders being priced in, as well as the new Roadster orders being priced into Tesla's market cap. Look at the size of the global market for just electric vehicles in 2019 and now compared to 2026, the projected value. Now, with 18% market share, Tesla alone would be worth over $102.96 billion, and that's just for the sales of its electric vehicles there, not even any of the other segments that are growing significantly for Tesla. And to be honest here, I think Tesla's market share is going to continue to increase and become significantly more than just 18% by 2026 as legacy automakers struggle with their debt burden, and just as Tesla continues to take out the competition and become, the gold standard for electric vehicles. So that growth in the global market for electric vehicles is absolutely astonishing. On top of that, the autonomous/driverless car market was valued at $24.1 billion in 2019. It's expected to grow at a CAGR of 18.06 from 2020 to 2025. So incredible growth there as well. And Tesla is really leading the charge for autonomous driving cars as well. Now let's look at other market segments. So the rideshare market, as I just touched on, 61.3 billion projected to grow, or no, I didn't touch on that, but projected to grow to 218 billion by 2025. And you might say, well, Tesla's not in the rideshare market at all, but if it does release its entire full self-driving, which we've seen immense progress on, it's pretty much at full self-driving right now with many of its vehicles. It's just running a lot of beta testing at the moment. Once it gets government approval to have robo-taxis out and about, it's going to completely obliterate any competition in the rideshare market, because that's what all the controversies and struggles with those rideshare companies have been. Uber and Lyft have really see the problem with the drivers themselves. And so if Tesla can basically literally eliminate the driver from the picture, it's going to be significantly more profitable, can undercut all the prices of those other businesses, pretty much run them out of business, and Tesla will be wildly successful and basically, in my opinion, have a monopoly on the rideshare market in the near future, which is going to be valued at $218 billion by 2025, most likely more as well by then, as the world population continues to grow and as other markets throughout the world start adopting rideshare programs. Vehicle to grid, peaker plant market. I'm not going to touch on this too much. There's tons of great videos on YouTube if you want to learn more about that. $800 billion potential. Potential is a key word. That's just the potential of it. 10 to 12 billion though in the US. Our electric grid, it really needs innovation. And Tesla as an energy company is able to provide more storage. This is perfect timing for Tesla to enter the electric utilities market. And if you want to learn more about that, I really suggest you watch some videos on YouTube. There's some really great ones out there that go into detail about vehicle to grid and what the peaker plant market is and how Tesla can potentially benefit significantly from that market. On top of that, we have the Tesla semi-autonomous delivery market valued at $796.7 billion. So that's pretty incredible. We also have apps and advertising, 5 to 10 billion, probably a little less than that. So the total value of these markets, and I would say this is definitely not a conservative estimate. This is definitely a pretty bullish estimate here at 1.297 trillion when all these markets are added together. So on top of that, we also see Cybertruck orders, as I touched on. One thing I do want to point out, though, with Cybertruck orders, and the reason what this has to do with the valuation of Tesla is that investors are, again, pricing these in. They're pricing in the future market values, and they're also pricing in pre-orders, et cetera, et cetera. Now, because of that, though, one thing I do worry about slightly is that probably there's going to be, and I agree with Elon's World's tweet here, about 10 to 20% of cancellation rate, and that is simply because it was so easy to pre-order a Cybertruck that it's going to be not very surprising if a bunch of them do end up with a cancel. However, I don't think that's saying much. There's still going to be a ton of orders for the Cybertruck that investors are pricing in. There's also Tesla Energy, and the global solar energy market was valued at $52.5 billion, projected to reach $223.3 billion by 2026. Part of Tesla's valuation and why it's so high right now is because all the markets that it's innovating and competing in are just so rapidly growing markets. So as those markets continue to rapidly grow, Tesla's benefiting significantly from those growing markets. I also didn't include battery storage for countries, rural areas, etc., charging stations, which can potentially lease out to competing auto manufacturers and auto producers, repairs and service. That grows with vehicle sales. Future vehicles, Sustech, who knows? The ATV/UTV market, which Tesla, has an ATV now. It's worth $8 billion. The market is currently worth, and it's actually projected to grow to $25 billion by 2025. So just another growing market that Tesla is competing in. Competition is also struggling. If we just go ahead and look at the debt, and you can, if you want this to be proven, I know I'm just throwing up the Google search here basically, but if you want to see the actual data, you can just go to their balance sheets. And Ford Motor has actually more than $150 billion in debt. That's separating financial statements, et cetera, but that's a lot of debt for Ford. On top of this, GM has around $126.8 billion of debt. That's an increase of 106.6 over just 1 year. On top of that, if we go to Volkswagen, it's the most indebted company with $192 billion debt burden, which is absolutely incredible. Tesla's actually just barely less than $13 billion in debt, and it has one of the lowest debt to revenue, it has one of the lowest debt to asset ratios out of all these companies, which is pretty incredible. Here's a more detailed breakdown, I guess, of the Tesla unpaid principal balance and its debt obligations. It's in thousands of dollars, by the way. But a more simple version of this is to look at just Tesla's debt for Solar City. Because around $8 billion, the majority of Tesla's debt came from the merger of Solar City and Tesla. However, what we've been seeing, which is really interesting, is Tesla's debt continues to grow, while Solar City's individual debt continues to decrease over time. And that's partially because the restructuring of SolarCity that took a lot of capital initially, and over time that debt's going to be decreasing as it becomes a more profitable company, as it grows, et cetera, et cetera. Whereas Tesla, they're taking on so much debt, especially for just the projects that they're working on. So all these gigafactories require an immense amount of debt to finance and to work on. It's no surprise that their debt is growing. But in Q3 2020, we actually saw a decrease from the previous quarter in Tesla's debt, which is a great sign there, and a continued decrease in SolarCity's debt that quarter. So this coming quarter will be really interesting to see what happens with Tesla. Democrats' policies should and will help Tesla as well. So President-elect Joe Biden, he wants to promote the rapid adoption of green energy technology to stimulate the economy, mitigate climate change. He selected Michigan Governor Jennifer Granholm as Secretary of Energy, which is a good first step. She has experience with Detroit auto industry. She'll almost certainly propose incentives to continue to expand the electrical vehicle industry in the U.S., emphasizing that American leadership in this area would be good for both the environment and the country's manufacturing sector. So how did Biden and Granholm move the ball with a sharply divided Congress? Well, it's not sharply divided anymore, so that doesn't really matter now that Democrats own pretty much the Senate and the House. Actually, they do. Congress also must step up, however, and I think we're going to see a lot of energy bills pass, I guess we could say, which will provide incentives to the energy sector as a whole for renewable energy, but also for the electric vehicle industry. I won't be surprised if those incentives are expanded upon. We're also seeing in Europe lots of great incentives for electric vehicle markets, and in China as well. Anyways, thanks for watching. I hope that gave a brief understanding for really why Tesla's valuation is where it is. On top of that, another great reason I want to point out at the end of this video that I was honestly thinking about while talking during this video is simply the fact that there's more retail investors than ever before. There's more money involved in the stock market than ever before. And when you have that many retail investors that have this crazy cult following around Tesla that Elon has created, that's going to involve a lot of investment from retail investors, which makes it different in Tesla's stock price. So it's no surprise that Tesla, is such a popular stock, why its valuation is so high. I think part of it is simply because there's more money being invested into the company, and its stock is simply a more desirable stock than any others. I think that's just a really simple reason. But on top of that, you're pricing in so many growing markets, so many growing industries that Tesla continues to innovate and compete in. Anyways, guys, this is StockerFinance, and I'll see you guys in the next video. Peace out.